All right, guys, welcome to Behind the Desk with me, Carl Dean. I'm excited today because it's going to be a little different show. We're trying some new things. It's a new show, everybody knows. I'm kind of going through the hoops, the loops, the challenges, trying to figure out where I really fit in this little market of podcasting and doing my thing. So, today I have an exciting show. Over the last week, we had the extraordinary pleasure, I should say. I was looking for the best word there. Extraordinary pleasure of co-hosting with the real estate guys on their Dallas field trip, which is basically 40 investors, 30 or 40 investors who come to the market. We tour them around the market. We show them a good time. We educate them on the market, the developments, what's going on, and just the economy as a whole, right? These people are interested investors. They have properties in other markets, and maybe they're just looking at potentially investing in the Dallas market. They want to see what all the hype's about. I think the most common thing between everybody was really the fact that they were so surprised to see how many cranes there were out. They were so surprised to see how much development there was going on and the road construction. It was just a massive amount of things going on. And I feel like a lot of people were shocked by that, which is strange to me because it's all I talk about. But that's neither here nor there. So we're going to go through basically my PowerPoint presentation here. And so this is something that I got to present in front of the group at the end of the tour. And this is also the same PowerPoint presentation that we just did with the Real Wealth Network, which is kind of like a hush-hush because I don't know if they've really released it to the audience that they have. But neither here nor there. We're going to kind of go through this because I really stumbled upon some very interesting information when I was putting this together. So let's get down to it. I don't want to get you guys all bored and have you clicking off the channel here. So listen close. All right. Dallas-Fort Worth is considered the beacon of opportunity. Okay. Texas's motto is actually keeping Texas a beacon of opportunity. So obviously that makes a lot of sense to me considering what I'm about to tell you. So why Texas, right? It's not just DFW. We're in multiple markets here in Texas, but why Texas, right? Nation's leader in job creation, okay? Nation's top export for the last 14 years. Now, when I say job creation, that's almost 2 million jobs that Texas has created over the last decade, okay? Being the top exporter for the last 14 years, totaling 16% of all U.S. goods last year, that's a pretty big feat. Now, when I also say the exporter, I want to point out Texas, for the third year in a row, has more money in exports for tech and electrical goods than even California. That's a big shocker to a lot of people because it's like the tech capital of the world, right? But Texas, hey man, there's a lot of road, there's a lot of transport, there's a lot of ports, there's a lot of shipping going in and out, and again, there's a lot of companies leaving California and moving here. So 12th largest economy in the world if it were on its own. And the most important part that I really want to talk about a lot today is the innovative and competitive legislation, the economic development being priority number one, and most of all, the Texas Enterprise Fund. Now, what is the Texas Enterprise Fund? The TEF, as they call it. So this is a fund put together in 2004 by Governor Perry. So what does it do? Well, since the time of its birth in 2004, the Texas Enterprise Fund has given out grants in total of almost $600 million to aggressively attract other companies to move their facilities headquarters to the Texas economy, whether it be in Houston, Dallas, Austin, Fort Worth, wherever you can really pinpoint across the map. Those are the major cities that they've really been targeting. And again, it's not just service industry jobs, you guys. It's not just lower level jobs. It's white collar, middle class to upper class jobs. These are $60,000-$70,000 jobs. Some of them are even 6-figure positions that they're bringing over here, and many of them, in fact, because you got to think, if you're moving from California and you're coming to Texas and you're keeping your California wages, wowza, that's a lot of money, right? That's a lot of money. That's not they're not cutting your pay because you live in Texas now. They're just saying, hey, it makes more sense. Why don't you go sell your studio apartment and buy a 4,000 square foot ranch in Texas for about the same price? Pretty ironic, right? So, okay, let's get into this a little bit more. Let's talk about how cool Texas is. Why not, right? We've won the Shovel Award for area development 11 times, okay, in the last decade or just over a decade. CEO Magazine, which is Chief Executive Magazine, rated it Best State for Business 2016. We have won the Governor's Cup, I believe, 1, 2, 3, 4, 5, 6, 7. I think it's 8 times, actually, because I think we just won it in 2016 as well. Forbes rated Texas #1 state for future job growth. That's pretty huge, right? And Forbes has done many, many articles. We'll see that on the next slide about how Texas is placed and how the cities have dominated the lists of fastest growing cities, best buy cities for real estate, et cetera, et cetera. The business facilities. This top state for infrastructure, exports, natural gas production, and renewable energy. CNBC, America's 2015 state for infrastructure, second best state for business. So I'm trying to whip through this real fast because I don't want to bore you guys and lose you. But you can see here again, Texas cities dominate these lists. You got the top 20 most business-friendly cities. Best cities for job seekers, top cities for high-tech jobs, America's fastest growing cities. And again, Texas is just dominating these lists, right? Multiple cities are on that list, multiple major cities. So Dallas-Fort Worth, where we're headquartered here in Dallas, the home prices are growing. And sorry for the little jingy. That's my little Frenchie bulldog here named Milo. He's my best friend, and I don't like to lock him out of the room here when I do these podcasts. So he's hanging out here with me. Hopefully he doesn't start barking, because if he sees a squirrel, it is lights out for all of us. Okay, so the median home price here in Dallas-Fort Worth is reported from Q1 of 2015 to Q1 of 2016 to have been increased by 8.6%. Now, when I moved here in January 2015, the median home price was about $177,000, and it has gone up to now $215,000 in the last 2 years. So, again, I haven't even been here 2 years, and you've seen quite a jump as far as that. Also, I would like to touch on the fact that it's now the fourth largest metro. Now, this is a new thing, right? This is something that we took over just last year. We took that place, and we have a population here in the Dallas-Fort Worth area of about 7.1, and it's growing. Okay, so again, all good things, right? All good things. Going into the next slide. What about oil, right? Everybody was so scared about the oil. A lot of investors, backpedaled. A lot of beginner investors backpedaled, but the smart investors, the hedge funds, didn't do that at all, right? I didn't do that at all because I know that Texas is far less reliant on oil than it ever has been before. So when you talk about Houston's number one employer, which is Walmart, which is also Texas's number one employer, and it's also the number one employer in 20 other states. So when you think about why Walmart is the number one employer, they're not going into markets where the population is low. They're not going into markets where they don't have enough people to feed or enough people to, have come through the stores. They're going places where the population is going, where there's a high population already. And so they're continuing to grow regardless of oil. They built 4 new grocery stores last year in 2015 down in Houston and 1 new supercenter. And they've committed to 5 more stores in 2016 with 2 of them already underway. Memorial Hermann Health Systems did the largest hiring spree of any other company in Houston, okay, increasing its payroll by 20%, adding 24,000 jobs, and you can see the companies here below that just decided to follow. Again, the medical sector and the retail sector has really provided a crutch that Houston and Texas itself needs to not be so reliant on oil. Just recently, Mitsubishi announced that it's going to move its headquarters from New York to Houston. So, that's another big Fortune 500 company moving to Houston from New York. A lot of the companies that are moving are coming from New York, from Chicago, and from California because the cost of living is high, the taxes are high, and there's a lot of opportunity here and incentives, right? So why not? These are the things, again, that not a lot of people talk about. It's not just about the houses and the returns and whatnot. It's about the economy, really. What's going on in the economy, right? Why is it doing so well? What is going on behind the scenes? Well, I'll tell you. The Texas Enterprise Fund is going out and aggressively closing deals, right? Like an investor itself, investing in itself, going out, closing deals, trying to get companies to move here. That's a good thing. I want to be on the winning team, and Texas sure seems like that team. So, again, you can see here, now this is a little bit dated because I know there's about 1,700 plus total businesses lost from California. And this is just registered businesses, you guys. Keep in mind, there's a lot more businesses that have left California to relocate. And this is just the businesses that are registered. So, and you see here it says 219 total businesses actually gained from Texas, from California. And that's almost $6.5 billion invested in Texas. Almost 40,000 jobs. Now, keep in mind, this is a little bit older, so now that number is actually about 260 different companies that have moved here. There's a little note here on the side. I don't want to get too far into it, but I think there was in 2013 to 2014, 250,000 people left California, totaling $21 billion in adjusted gross income. This is stated by the IRS. And of the returns, or of those people, 33,000, almost 34,000 reported address changes from California to Texas, which has been the top destination for individuals leaving California since 2007. So that goes to say and goes to show and all that fun stuff. So that goes to show you something, there's definitely an opportunity here in Texas. So let's talk about the most recent announcements, okay? Here's some very, very, very large major companies that have decided just recently announced that they're going to move from California to Texas. These ones are all specifically in Dallas-Fort Worth area. So we have Jacobs Engineering, a Fortune 500 company, $277,000 aggressive grant that Texas gave them to move 111 employees and a facility here headquartered in Dallas. McKesson Co. Okay, now this is a big one. Some of you guys might not recognize the name McKesson Co. But I mean, hey, let's put it in perspective here, guys. This is the 5th largest Fortune 500 company in the world. Okay, and immediately, McKesson will become one of Irving's largest employers as soon as it moves, right? Bringing an estimated $4.7 billion in total economic activity over the next decade. That's huge, right? $157 million investment in Texas and a $9.7 million grant given to promise over 100 plus jobs or 1,000 plus jobs. Now, since Governor Abbott has been in office, since I believe January of 2015, that $9.7 million grant that he signed was the largest one that he signed while he's been in office. There's a couple other ones that happened in 2015. However, those were announced and put together by Governor Perry in 2014. Galderma is a Swiss dermatology company, $2.1 million grant, 342 new jobs, $22 million investment in Fort Worth. Pegasus Foods, 325 new jobs, $10 million investment in Rockwall, and most recently, Jamba Juice with an $800,000 grant, and they're moving 100 employees to Frisco. So look at this. I mean, when you look at this, what do you see, right? I see people deciding to move large companies to Texas for the benefit of having more affordable living, saving money on taxes, right? Increasing exports, being able to get where they need to go faster as far as their products, their services, whatever they're offering, shipping. There's if any of you guys have been to California and been through LA and some of the other cities, traffic is a mess, and exporting out of that area it can be a little bit of a hassle. Texas has the most roads and most miles in roads and most miles in railroad as well, and there's a lot of shipping ports coming off of Texas, so that's a big thing. It's a big factor. It all around makes sense, especially when you're getting incentivized, especially when there's a cheaper cost of living and there's an opportunity not only for your business to flourish, but also for your employees to be even more happier and have a better quality of life. This is just a screenshot of some of the companies that have been signed up so far this year by Governor Abbott to decide to move their headquarters here. Now you can see this is all public information, and I can share this with you guys if you'd like to. I have a text opt-in at the end of this presentation, which I'm trying to keep as short as possible, but this is in 2016. You have a company coming in Urban, that's McKesson, okay? 975 jobs are promising, and a total of 1,700 with the people that they plan on hiring once here. Thomas Reuters and Carrollton, software publishers. Now let's just take a second to look at this, guys. Okay, when I say that they're doing their best to create good, high-paying, white-collar jobs aside and out, from the oil industry, you have wind tower manufacturing, pharmaceuticals, IT service, industrial manufacturing, plastic sheet manufacturing, software publishers, pharmaceutical distribution, financial lending. None of those are oil companies, all right? This goes to show right here that we are being supremely super aggressive in trying to get other businesses here, right? We are giving a total of $22 million so far. I think we have 105 left in the piggy bank here to hand out for the rest of the year. But we're bringing in almost $500 million in capital investments from these other companies, right? In almost 8,000 jobs. I mean, that's a lot. That's promising a lot. So going down here, again, I have the entire printout since 2004. You guys think about this, okay? In 2004, this thing was put together. Why? Because everybody knew that the crash was coming. There was high-level government people. You guys have seen The Big Short, right? There was people whispering about this and talking about this at conferences and getting up and blurting things out. You've seen the movie. Texas government officials and people in the legislative group there, they weren't blind to this, right? They were aggressive towards this because they knew they were so reliant on oil. They said, hey, we can't keep having these massive oil crashes affect our economy so bad. So they decided to put this fund together in 2004, which, mind you, was the first year that it was activated, and they spent the most money in that year. Why? I think, personally, because they knew that crash was coming, and they were trying to make sure that they were insulated from that. And so that first year, of the $600 million that they've handed out to date to incentivize people, we're looking at 279,000 of it was given out the first year from 2004 to 2005, right? So that's a lot of money. They're being super aggressive to try to make sure, again, if this crashes, we want to be ready. We want to have these other companies here. Now, Texas Instruments was a company that they incentivized in that year of 2004, and they gave a $50 million grant to. Now, when you look at what Texas Instruments was willing to do for the state as far as a capital investment, $3 billion, you guys. That's huge, right? A new facility, new people, new landscape, new structures, everything. And I've got the full report here, and it goes through year by year. I've highlighted a lot of things. The smallest incentive they gave was $2 million, and I believe it was to, let me see if I can find it here. Oh, you know what? It was actually $1 million, and it was to Dow Chemical. And for that particular award, Dow brought in $1.7 billion. So that was a big win for the city, right? Or for the state, giving out $1 million incentivization. And it's saying here the direct state return tax revenue divided by the amount awarded, because they take it back in taxes, is 14,323% return. That's pretty good coming from Dow Chemical. So again, there's been a lot of behind the scenes stuff going on with the Texas Enterprise Fund. Now, you might think, oh, well, what does my enterprise fund have here in Iowa or one of these other states? Not a lot of people are doing this, right? You guys, there's some states like Florida who have these type of programs, but Texas is the only one that's really, really, really being aggressive in making sure that they close deals, right? They're the largest fund that closes deals nonstop to get companies to move here, and they're incentivizing it. It makes a lot of sense for them because, the economy is growing like crazy, right? We're about to have the first ever bullet train, as you can see here on the screen, and that's set to break ground in 2017 and be done in 2022. That's going to go from Dallas-Fort Worth down to Houston. It's going to take about 90 minutes. It goes about 200 miles an hour. It's pretty cool. They have one in Japan, and that's going to be exciting. Also, the DART station has become quite a hotspot for developers looking to develop apartment buildings. So you can see the 21-floor, 198 luxury apartments that are going up in Uptown Dallas right now by Stoneleigh. CEO Rick Kavanaugh announced that he is also going to do a 230-unit apartment complex in Carrollton, right next to the DART commuter, to make it easy for people to transport back and forth from downtown Dallas to North Dallas to Fort Worth. And so that's going to be a big one, and that's set to break ground, I think he says, next year, breaking ground Q1 2017. And so he just broke ground on 380 units and on a Frisco development as well. So the Stoneleigh Corporation is doing very, very well, and they're being very aggressive in their development wherever they are. All right. So major economic developments aside from that, right across from our office here in Dallas on 635 and the North Tollway, we have a Midtown project that is a $4 billion plus 430-acre complete renovation, tear down, rebuild. It's going to be, the first phase is going to have 204-room hotel, 310 apartments, a lot of office space. As you can see, almost 100,000 square feet of office space, a lot of retail space, some restaurants, AMC movie theater. And so, yeah, that's going to be a big one. You can see some pictures I have here. This is obviously LBJ Freeway. Let me see if I can get you guys on the mouse here. All right, so you can see, LBJ Freeway, North Dallas. This is the big thing here. We got the little park area here and a bunch of apartments, a bunch of other new things going on. And for those of you listening, obviously you can download this PowerPoint, or at the end here, I'll give you an opt-in code where you can text to opt in, and I'll give you a copy of it. So here's some things that are being said that are quotes I pulled from different sources about large corporations moving here. So Jim Weissman, Vice President of Toyota Manufacturing of Texas. Texas offers the infrastructure, support, and resources we need to run our business. What's the next one here? From chiefexecutive.net, we have Texas. What else needs to be said? Great people, low tax, low regulation, great central location. And last one I have here is Texas cities are clearly the place to be in terms of job creation, wealth formation, and overall growth, Forbes magazine. So again, guys, I have some pictures here of some of our A-class properties, and this isn't really, I'm not going to get into any of this, but we have some financing options. We have non-recourse and conventional finance options. Our non-recourse options at 6.99% are industry low. Here's some of our properties. I'm just going to go through this really quickly. Our typical assets are anywhere from $140,000 to $225,000, and they kick off a good return, and they're conservative, anywhere from a 6 to an 8.5% net return. That is after all assumptions, maintenance, vacancy, property management, you name it. They do also come with a warranty, full 90-day warranty, bumper to bumper in case anything happens. We do have an option for an extended warranty up to 1 year to make sure that you have no risk and you can sleep at night knowing that you're getting a good asset. So aftercare is something we're really big on, making sure that we get an executive call. So I actually reach out to the clients, make sure their process of closing a home and picking out a home went well, make sure they have had a good experience with our company, and see if they have any feedback, any ways we can improve. Again, I'm always trying to get better. I'm always trying to make sure that the clients are happy. That is my number one thing here. So here you go, guys. If you want a copy of the report, and I'll also send you a copy of the Texas Enterprise Fund complete spending report since 2004, I can send you that. If you look through this and really start to look at those numbers and really understand what we're doing here, Texas as a state, it'll really help you feel more comfortable in investing in Texas, right? Because no one else is being this aggressive to get businesses and companies to move there. It's a breeding ground for opportunity. It really is. So if you text DFW to 484-240-2734, you'll get a copy of this report and this PowerPoint. Again, for those of you listening in the car or on your bike riding or wherever you're at the gym or whatnot, I'm going to say it again. It is text DFW to 484-240-2734. That's 484-240 AREI for those of you who are a little bit better with knowing how to remember things. So 484-240 AREI, and that is text DFW. You'll get a copy of the report. You get access to the property portal. You'll get a list of all the links used to put this report together, so all my resources, references, and whatnot. And that is an extensive list of some very awesome articles that you would love to read. I mean, I loved reading every one of them. I've posted several of them on our site, on our social media, and you will be able to get on the Dean's List. So the Dean's List is something new that we're rolling out. It is something for our investors who have bought 2 or more homes, and you get kind of points and you get a higher GPA by opening our emails, by reading the marketing brochures, by reading some of the stuff that we send out. Because again, guys, I work very hard to put out good content, up-to-date content for you guys. I'm not doing it for any other reason other than to keep you educated on this market and to, again, sharpen my own skills. And so I don't send you guys spam. I send out a property once a week. I sent one out yesterday. We had a buyer within an hour. We also had 19 other people that came and actually inquired about the property that were interested in the property, and my sales team is working with each one of them to try to find them a suitable property that is comparable to the one that they've seen in the email. Because again, they go quick, right? You have to be ready to act. So guys, that's really all I have today. I just wanted to talk about the Texas Enterprise Fund because I don't see a lot of people talking about it. I wanted to make sure you guys were aware of what's going on in this market and why this market has so much potential, right? Because we're consistently focusing on growing, building, developing, bringing more people here. We have a lot of land to give, okay? And Texas is definitely one of the states with the most billionaires, right? There's a lot of money here, a lot of ex-presidents. There's a lot of things going on here. And it is, again, it's just a strong economy to be involved in, to work in, to live in. And it's very, very cost effective compared to some of the other major cities. So when you think about the fact that we have 54 Fortune 500 companies here in Texas, second most, only behind New York. And I think I want to say California has 53, but you think about those cities, the cost of living, the cost per square foot for a home, and then you compare that to Texas, and I mean, there's just no competition, right? That's when you think about that, all these jobs, we're in the same race as they are, as far as all the jobs and whatnot, and we're a fraction of the cost. So it just makes sense, and I wanted you guys to really understand that. I would love to send you out a copy of this Texas Enterprise Fund report and this webinar. So please do text DFW to 484-240-2734. Check out our website at www.areiusa.com. And as always, you can check out the blogs and everything that I have either on our American Real Estate site that I just mentioned, or you can go to getbehindthedesk.com, where you can get this report and many other reports. And please leave all of your questions on our Facebook. I would love to talk about some of the questions you guys have about this market, about that market, about housing in general, rehabs, whatever you have. Single family rentals is kind of my hedgehog. It's kind of my hedgehog concept. I'm very, very good at producing these rentals in multiple markets with a systemized approach. And so I'd love to answer any of you guys' questions. And you can do that by leaving them either on the American Real Estate Investments Facebook, or you can go to Carl Dean Real Estate on Facebook and go to my professional page. Leave those questions there, and I will be sure to try to answer all of them on the next podcast. I look forward to talking to you guys next week. And thank you so much for sitting behind the desk with me today. Carl Dean is out.